So, good day, guys. I can't remember the number of this episode, but I think this should be episode six. Yeah, seven. I don't know. It should be between six and seven. I don't need to grab it on my head. So, today I gave you guys an assignment on GBP NZD. And I wanted that assignment because there is a perspective of trading I want all of you to understand. Okay, I want all of you to understand the perspective of trading. And then today, our topic is model one. So we've started the models today, and we'll see how far the models are going to take us, right? So, model one comes after the basic doctor system. So, when do you apply model one? It depends. Listen attentively, it depends. Now, model one is one of the best conservative method of trading that gives you easier profitability from what I've seen and done on the chart. Now, how do you apply model one? You apply model one if you want to take continuation or if you want to use it as confirmation. Which, if you stick to its confirmation, you are going to miss entries, but you are going to take legit, more legit trades, right? So, first of all, after you've confirmed your bias that you are bullish, so take a look at what I did here. We have a daily reject daily. Market gave us the rejection on the daily and gave us a 4-hour breakout above here. So after the 4-hour breakout right above there, market traded down into what? The 4-hour QM. After trading down into the 4-hour QM, now this is the bigger picture on the 15 minutes time frame. What you do if the market trade to H4 key levels for buy, since we are bullish, you look out for a 15-minute structure. So look at this 15-minute structure. Market give you a type 1 breakout. First, market should always give you a type 1 breakout after tapping the H4 key level. So let me mark out the H4 key level like this. This should be what? That H4 key level, right? Right? So I can write it as a H4 QM if I want. I can write H4 QM, right? So this is it. After the market hits this particular H4 QM on the 15 minutes time frame, you want to see a breakout and you want to see a structure like this. Market can either come back to the apex or to the QM with structural liquidity right here, right? The same thing I just explained. So basically, this is how you trade the model one. Look, notes after bias is confirmed, meaning you have your direction, daily reject, daily H4 breakout. Depending on that, we use H4 key levels to buy or sell depending on direction. So now we want to buy. So H4 key levels, bullish key levels are supposed to be used for buy, meaning we are going to be looking out for support, right? We wait for rejection on H4 and a 15-minute breakout, type 1, and then trade the advance or candlestick structure shown on the 15 minutes time frame. That is it. Daily reject, daily H4 breakout, market pull back to a H4 key level, give you a 15-minute breakout, then you trade the advanced market structure on the 15 minutes time frame. Very simple. And this works well, especially when you have a 4-hour CRT. When you have a 4-hour CRT, you're going to make a whole lot of money from it, right? Is it only on the normative way? Yes, probably. No, not always, but you tend to understand it with time. Okay, it's not always, but as far as the market rejects H4 key level and give you a 15-minute breakout, and then you have a direction, then it's cool. So when are you going to have a H4 key level for the market to reject from? It's usually on the normative way, right? So that's the answer to your question. So this is for this model one. And model one is one of the best methods. Like I said, you're going to miss entries, you're going to lose trades, but you're going to win a lot of trades. You're going to have smaller stop loss, and you can consistently take a 1:5 trade, right? So this is how it's going to present itself. Someone said, "What about structure type 3?" No, you can do that if you've seen it, but from my experience, I have never done that sincerely. I do take structure type 3, but not really just this particular structure. But I think structure type 3 should work. It should work, definitely. It should work. So now let's get into the chart. So we are going to give one or two examples, some couple of examples on the chart. So we'll see. So which pair should we use for examples? The ones that we've seen this thing happen like consistently. So now let's go into NZDJPY. So before that, I'll show you guys random trades at first, and then later on, I'll try my very best to show you guys other things. So I think this place we have a 15-minute breakout right here, and the market gave us the formation of a CRT, right? Remember, whenever the market forms CRT, you are interested in trading what to the high. Now, after the market did a 4-hour reject 4-hour, we were bullish already, right? Because we did KLR. Remember that day on NZDJPY. So We did the 4-hour reject, 4-hour, and then a 15-minute breakout. Now, the only problem with this breakout is it was not too sure that it's a type 1 breakout, right? So that's why it was quite difficult. It was not too sure that it's a type 1 breakout. It was not like too much of a type 1 breakout. For it to be a type 1 breakout, the market need to break up over here. But the market break below here, and then the market give us a confirmation and a structure, right? Because the market gave a sweep of liquidity right here based on advanced market structure. Market gave us a structural liquidity. A market dropped down into this QM right here that got tested. So this is an advanced market structure after the market rejected what? AH4 key level. So this makes a whole lot of sense for someone to trade it, right? But I think a lot of you have seen it happen consistently on chart. So we're going to the chart and we're going to look for it. You know me, I hardly remember all these things. So let's use GBP USD and let's go into the 4-hour time frame. So we'll look for a very perfect setup that, oh, this was class for yesterday. It's still here. Damn. Okay. Let's go into previous price action. Let's go into previous price action. Maybe we're going to see something better, right? So let's take a look at this one right here. What happened right here is let's go into the daily time frame. Now on the daily time frame, this is what happened. If you remember this particular day, we did have a shadow reject, right? We did have a shadow reject. I don't want this model 1 class to be long because I have something to say. Now after this shadow reject right here, because we need to go through GBP and ZD, and it's a very, very important conversation for you guys, right? Market give a shadow reject, we come into the H4 time frame or the H1 time frame, anyone. Now, if you are using the basic idea of the doctor system, you're going to be looking forward to buy off of this QM or this QM, or we don't have an apex because the apex have been mitigated. But then if you are now a model 1 trader, you understand that you always want to wait for a 15-minute breakout. Then when the market drop all the way down and rejected from this H4 key level, you are not interested in this rejection. You are, but after the rejection, you are going to be investigating a 15-minute breakout. Also, depending on the time, there are times I don't pay attention to the chart and I don't care about it, especially during Asia. I don't really pay attention to the chart. I want to wake up during London session or during New York session and find this particular thing. That is where the probability of it holding is very high. So when the market came here, we go into the 15-minute time frame and we are going to be looking forward a breakout type 1, right? Because right now we've established a directional bias. Now let's pay attention. Was there a breakout type 1? No, because the market rejected from here. Market rejected from here, there is no breakout type 1. Quite all right. For the market to give us a breakout type 1, as of that time, we need to see the market break where above here. But then when the market dropped down to this OCL, listing attentively, market rejected from here, and market gave us a type 1 breakout above here. After the breakout, market dropped down all the way. And this time around, we're going to be using the QM. Now, you will now be shocked that, okay, why am I picking this QM for my structure? Now, look, throughout this entire move, right? This is the only place that the market gave us an imbalance. Now, inside this imbalance, now all of us know that, okay, within this imbalance, I'm coming, this is too ugly. Right. So now, inside this imbalance now, we have this particular thing. But at the same time, I want to teach you guys another thing. We can go into the 1-hour time frame, and for you to have a better entry, I like seeing overlapping key levels. You understand? Now, I want to see the market overlapping inside some sort of thing. Just look at after the breakouts, this is the H1 key level that the market dropped into the imbalance right here. Now, what is this? What is this? This is structural liquidity, right? You all know I taught you guys that this is structural liquidity, and that's the QM there. And then you're going to place your stop loss properly. This is what I want you guys to know. Place your stop loss properly. The market is not your own. You are trying to preserve your capital, protect your capital. And then this is going to be a model 1. What did you do? You have an advanced market structure because there is a sweep of liquidity, there is a break of structure on the 15-minute time frame, and there's a structural liquidity. You can decide to place your stop loss like this. It's cool. It's cool. Because you just know that, okay, inside this imbalance, there's that liquidity and there's that 15-minute stuff and there's everything. But let's check the 30 minutes. Maybe we'll see something better. Yeah, that's the best place to execute from because that liquidity is there. Okay. And you are choosing the key level that is closest to liquidity. Now, remember one thing. What are the rules for you to enter? Anytime you have a setup, remember, there must be a break of structure. there must be a breakout structure under your entry time frame. Secondly, there must be liquidity. Thirdly, there must be key level that is close to that liquidity and the key level that is unmitigated and the key level that is overlapping with the higher time frame key level. That's the one that is going to make sense. But it is okay if one of the rules are not there. You just need to know and learn how to do it consistently. Right, and that is what happened to this particular trade. Now, if you want to keep taking continuations, you can play any of the model I'm going to teach you guys with time. But for now, we are all focusing on what? On model one, right? We are all focusing on model one. Now, let's pay attention to this particular candle that just pulled all the way back up here. When this candle dropped down, it came into a key level around this zone. Just this key level, sorry, made a mistake. This key level right here. Now, when the market dropped into that key level, the same thing, you can still go into the 15 minutes time frame and try to sort out that, okay, when the market reject there, why? Because we are continuing to the upside and I'm consistently trying to use confirmation off of that 15 minutes off of that 15 minutes time frame, right? Then you can still come into that side because what you have a direction already. You're just looking forward to how you can use that particular direction. Now, this is it. Market drop into this zone right there. We don't have any type 1 breakout. So you just have to calm down. Okay. So when you just have a direction, this is how you can easily and basically execute. That's the easiest way of executing. I think there was one, I'm coming. This is the 15 minutes time frame on GU before the drop. There was a drop that happened. So I think there were some sort of executions right here. So let's go into the file. Let me draw a line right here. Let's go into the file. Sorry, let's try from the daily. On the daily, right here. Okay, so let's go into the file. All right, on the file. Now, let's take a look at this. On the daily, all this drop here, there was no breakout or anything. We were looking forward to a KLR. And the market dropped into a KLR zone. If you go there, there's a daily OCL. So let's check the daily properly. So we're looking forward to a KLR. Can you see that? Market dropped into that OCL. No, that's not what happened. That's not what happened. No, that's not what happened. No. Let me still check the 4 hour again. That's not what happened. I've remembered. That's not what happened. That's not what happened. Okay, yeah, that's not what happened. What happened is the market is just moving to the upside. So during the process of the market moving to the upside, remember, anytime the market pull back down to any H4 key level, you can look for a 15-minute breakout. It's not random. But why did I tell you that? The reason is because anytime the market wants to take a continuation, listen to timing. Let me teach you guys a little bit of timing. Anytime candle is about to close, after London close, we have 4 kill zones. We have the London open, we have the New York open, we have the London close, and we have the what? Asian kill zone. These are the 4 kill zones we have. Now, if you are in Nigeria, you know that in the morning around 8 to 12, that's when we have London open. In the afternoon around 2 to 5, or yeah, that's when we have New York open. And 5 to 7 is London close. And midnight, around 12 to 5 midnight, is what? Is Asian session. So now there is something about candle closure. Anytime the market anytime the candle is about to close, it's going to pull back. So all this drop you are seeing, if you check the time, you notice that it's the time that candle is about to close. Not always, right? So now, when the market is pulling back, since we are bullish, all these H4 key levels are supposed to be used for buys. Yes. So you can mark them out and try to buy here, try to buy here, and try to buy here. But it's not random. You have to be very picky. Now, each of these that the market trade into, you're going to try and look for a 15-minute breakout. The one that gives you the breakout is likely going to be the one that the market is trying to use. Now, pay attention. The market was dropping. The market penetrated this one. The market penetrated this one. The market penetrated this one. All of them. For the market to break above this one, the market needs to break above this key level for us to have a type 1 breakout. But then, because the market is not random, okay, still coming to that same H4 key level, H4 time frame, you notice that around here, the market break all of them. But when the market traded into this one, the market gave a very, let's see, when the market traded into that particular one, the market gave us a 15-minute breakout. Now, after the market mitigated that key level around there, right here, mitigation of that key level, market gave us a breakout above here. Now, immediately the candle break above here, you're going to be looking for a pullback on the 15 minutes time frame, and you're going to be looking for a point of execution. Now, this is where a lot of continuation entries come in. Why? Because if you take a look at this entire move, this is an imbalance, this is an imbalance. So this is liquidity. Me, I'll not choose this. I'll choose the one that is below because I like protecting my stop loss. And then I'll look for a key level that has history for me to use. Now, the same thing happened. When the continuation started playing out, this is also another point of execution. The continuation setup. We have an obvious liquidity right here. We now have a key level that is overlapping inside an imbalance. Then the market used this one for a buy. So let's still check the H4 time frame for further information. Okay. Now, can you see what happened? Can you see what happened? Market dropped into this H4 key level. Just watch. H4 rejected H4 again. When you go into the 15 minutes time frame, just watch. H4 rejected H4. When the market dropped into the 50, look at the H4 rejected H4. H4 gave us a breakout above here, above here, above here. All these are what breakouts. Then the market gave you a continuation setup. Look at what the guy just said. Someone mentioned it. He said, can you use more structure type 3? And I was contemplating because I've never really done it, but this is it playing out right here. Okay. H4 rejected H4. Market give you a 15-minute breakout, and then the market formed this entire thing, right? And it's cool for you to take a trade. Now, this model one, if you understand it, it's one of the best and the most conservative way to profitability. Because when I posted the model one on X and then TikTok, I think I promise you guys, the people that are telling me they use model one to pass their account or to do this thing, they are the most. A lot of people are sticking to it. Why? Once you have your direction, you are just looking for 4-hour key levels that are going to lead to a 15-minute breakout because it's going to show you a potential to move. Then you can look for a structure there. It's okay for you to find a 4-hour key level that is not giving you a breakout. It's okay for you to find a 4-hour key level that is giving you a breakout, but it's not giving you the responsible structure you want to see and you're not interested. It's okay for you to even not find anything. It's okay. It's okay for you to anticipate a setup and the setup did not happen and you leave. Okay, so you see this particular thing that happened right there. So let's still go into the H4 time frame. I think I want to show you guys so many examples, but examples don't want to show themselves. examples don't want to show. Examples don't want to show themselves. So let's take a look at this. Right here, we also have a H4 rejects H4. I'm trying it to be a little bit random now, but yeah, just trying to show you guys how it's going to display itself. H4 rejected H4. H4 gave us a type 1 breakout right here. Look at it, type 1 breakout. After the breakout, market pull back all the way up here. Now, just look at this type of scenario. Listen, you have an imbalance, right? So automatically, you know you have liquidity right here. So you're not going to stress yourself. Now, look, mitigated this. Look at the continuous mitigation. Mitigated, right here, mitigated this one. So all these key levels have been used. You're not interested in them. Which one? The only fresh one is this OCL. Then you play this OCL. Very simple. And then you place your stop loss at the high. And then what happened? H4 rejected H4 15-minute breakout. So now the conservative and the normative way of doing this thing is very simple. Once you have a direction, you have a daily reject daily. I'll just explain it for the last time. A daily reject daily. Market coming to the H4 time frame. Now, all bearish H4 key levels are supposed to be used for sales because you have a H4 breakout. Now, anytime the market trade into a H4 key level, you are free to look for a 15-minute breakout type 1, and then you sell when the structure makes a lot of sense to you. That's why we taught structure, and it's going to give you the money you're looking for. Do this thing on every pair once a day, and you see the results. Just do it once. When you hit SL, you're done. When you hit TP, you're done. So all these things, and also make sure you guys back test to a certain point that you understand pairs that are giving so many better moves. Then that thing, because it helped me a lot. Now I'll explain this thing again to you guys on German 40, and a little bit of a mess up I did right here that I shouldn't have. Now, when this particular thing happened after the rejection from this key level, if I can remember, there was a H4 reject H4 because the storyline had already started. Now, after the market tap on this place, market gave us a clear 15-minute breakout above here. Yes, there was a 15-minute breakout. Now, that setup I took, I'm still explaining it, 15-minute breakout. Instead of me to use this drop as a confirmation entry to continue the buy, I messed up. Now, watch why I'm talking about using this drop. Now, all the key level have mitigated themselves, but I have a sweep of liquidity and a breakout structure. So there ought to be a key level below this liquidity that I'm using. Now, that was what just opportuned me to switch into the 5 minutes time frame, but you shouldn't do that, please. Don't do that. Now, look at this liquidity right here. Can you see that? I see the liquidity. Market drop down. Just look at the liquidity. Look at the imbalance right there, and look at this QM. So beautiful. Can you see that? So beautiful. And then this is now an entry. So if you don't want to be an aggressive trader, this is the normal way for you to trade profitably and very easily. What happened right there that day? I'll just use the day for explanation again so that when you see it the next time, it's not going to like stress you. It can come in form of continuation setup, it can come in form of confirmation entry, it can come in form of so many things. So when you know model one, you shouldn't even aggressively trade the basic doctor system. Wait for the market. And when you learn how to wait and use the 15-minute time frame, then you're going to make a lot of money. Now you guys should see what happened here. We have a sweep of liquidity, we have a rejection from the daily time frame coming from somewhere, which everybody, I don't want to go to a daily time frame, right? There, yeah, I think it was around here. Daily rejected daily here. We have a power breakout and everything happened. Now we wait for the market to now drop into any 4-hour key level, which is this. Now after the market drop, we'll go into the 15 minutes time frame. Now once we go into the 15 minutes time frame, this is it. This is where the market dropped into the H4 key level, and then market rejected the H4 key level, and market gave us a type 1 breakout above here. Now, after the type 1 breakout, we all want to buy, and we are going to be looking for buy from a specific zone. Look at the way all the key levels here have been mitigated. Now, some of us are going to be looking out for this. Yes, but then this is not even an engulfing buy candle, which is making me not interested in this particular thing at all. I am not interested. Why? All I know is okay, I have liquidity. That was why I was like, okay, let me go into the 5 minutes time frame. And then going into the 5 minutes time frame, that was the only thing that gave me the opportunity to see this QM, which is an engulfing that failed. And then the market used this particular QM to go to the upside. Now let's go into the H4 time frame. Why? Because all H4 bullish key levels are supposed to be used for buy. So we can look for continuations at some point. We can look for continuation. Now, how do we look for that continuation? We wait for the market to drop into H4 key level. Once the market drop into any H4 key level, now we can look for a 15-minute breakout and whatever it is. So the market drop into this one. We'll investigate this. The market drop into this one. So these are the two bullish H4 key levels that the market drop into. And then we also have the formation of a shadow reject, which is the H4 CRT. So these are the four things we're going to be looking, three things we're going to be looking out for. So let's look out for them. Now, market rejected this one and gave a breakout and then nothing meaningful. We wait for the next one. Market drop here, give a breakout right here, nothing meaningful. I don't think there is anything very meaningful right here because the market is just giving weak. So there's no opportunity to take continuation from here. But when we come to more classes and we come to model 4, I would explain more and you notice and you understand how you are supposed to execute from here directly. Okay, how you should have executed from here directly. This QM right here, right here. So this should have been an entry here. This is a normal continuation setup, right? So we would explain that. But for now, stick to model 1. Finally, the explanation of model 1 again. Once you have a direction, wait for the market to hit a 4H4 key level, give you a 15-minute breakout type 1, then you can trade structure type 1, type 2, type 3 on the 15 minutes time frame. Okay, you can also check if it's overlapping with the H1 key level or H4, mostly H1 key level. Okay, or H4, H2, anyone, at least it should be a little bit on the higher time frame. It's going to give you so much confidence. Just execute from there and you give the market the opportunity to do what it wants to do. Don't stress yourself. Allow the market to do what it wants to do. If the market hits your SL, that's its own cup of tea. If the market goes your direction, that is all. You shouldn't stress yourself too much, okay? So there shouldn't be too much stress. So I think we should do one or more example again, and then we're done. And then we are done. And then we are done, right? I don't know, but I think this is consistent on gold. It's very consistent on gold. Let me check Oanda. That's going to be. It's difficult for me to find setups like this now because I learned how to delete all my setups. Now, look at this. H4 rejected H4. Can you see that? Market take out liquidity and give us a H4 rejection. After this H4 rejection, what next? Because we are already bullish based on KLR, right? You go into the 15 minutes time frame. On the 15 minutes time frame, what happened? On the 15 minutes time frame, we have what? The breakout. After the breakout, we have liquidity that was created and we have what? OCL overlapping inside this imbalance. Now, this OCL that is overlapping inside this imbalance is what? This OCL that is overlapping imbalance is like structure type 3. I've explained it before. because it's the same thing. RBS got this. I'm sorry, OCL getting disrespected is the same thing as RBS and SBR, right? So you use it to execute. Now let me explain this entire trip so that everything is going to make sense for you. Everything is going to make sense. Now let's go into the weekly time frame. Everything right here is going to make sense to you. Right? It's quite difficult for you to understand the opening and the closings of this candle, but gold used to give two different stops. You understand? Two different stops. Gold used to give two different stops. Now, we all know we are bullish last week, and we all waited for gold to drop down into the OCL on the weekly for us to do a KLR. So let me use the other gold and then I'll merge it and come back to this gold because that's how I used to manage both golds. Now, what happened? This last week, before this current week, closed above key levels. It closed above some certain key levels, and all we were expecting is for the market to pull back into this OCL before the buy continuation. That's just what KLR is. So you go into the daily to refine. Oh my God. You go into the daily to refine, and on the daily, you're going to try to refine to this low, right? And then you go into the H4 to refine per hour, and then you're going to try to refine to what this low, which the market did not come. But at the same time, what do we have right there? We have a weekly reject weekly from here. After the weekly rejected, now listen, after the weekly rejected, we go into the daily time frame. And on the daily time frame, we have a breakout. That is confirming that all of us are bullish. Am I correct? Yes. Weekly rejected, daily breakout. So very important. And we have a type 1 breakout. So we are going to be looking for buys on QM and apexes. But on Friday, market now did something. Market gave us a shadow reject. After the shadow reject, we go into the 4-hour time frame. Oh, sorry, the 1-hour time frame. Now, on the 1-hour time frame, we have a breakout already. Now, we have a breakout right here. So we have a shadow reject and a 1-hour breakout. Now, let me go to the other gold and continue the explanation. We have a shadow reject and a 1-hour breakout. Now, when the market dropped down, remember on the H4 time frame, this is a key level. Market give us a H4 reject H4, and then we can easily use the 15-minute breakout as a confirmation for the shadow reject and the 1-hour breakout. Then we're going to use this to execute on the buy, and this is a model 1. Now, when this thing happened, let's still go into the H4 time frame. When this particular thing happened, market dropped down inside this place, and what? The buy started a little bit. Now, when this buy started a little bit, market still give us another confirmation, which I've already explained in previous videos. Rejected there, give us another confirmation, another 15-minute break, and then another liquidity setup right here, and then a key level that has history. Then use this and place your stop loss properly, as always. Place your stop loss properly, and then the market is going to move to a direction. So you consistently see where and when the market is rejecting H4 key levels, giving you a 15-minute breakout and going to a direction. Now pay attention to this price action right here. Now let's go to the power time frame. Let me show you. So we have 10 more minutes, and in this 10 minutes, I want to break down GBP NZD. But let's see. Now you see this price action right here. Now let me use forex.com. You know, both of them are very stupid, so you just have to manage. I'm sorry about that. Right now, what happened right here is we were very short term. Now we have a type 2 breakout. Yes, type 2. It's not a type 1 breakout. For it to be type 1, market need to break below here. It's a type 2 breakout. So we are temporarily bearish. So you are being conservative. Yes, you waited for the market to pull back and reject the H4 key level. Market decided to reject this one. After rejecting, what do you do? 15 minutes. Once you come to the 15 minutes time frame, what did the market give you? Market give you a 15-minute breakout to the downside. Type 1. After the breakout, what do? You have liquidity right here. After liquidity right here, right? You want to sell. Okay, you have two fair value gaps. I always like choosing the one above. Like I said, it's better I miss entry. Then you sell from here. First entry. Okay. The same thing again. Market rejected here. Give you another 15-minute breakout. You have an imbalance. Use the one above. Now, where are you going to be executing from? Are you going to use the apex? No. This OCL that is overlapping inside this imbalance. Boom. I use this. Can you see? 15-minute breakout giving you advanced market structure. It's an advanced market structure. Why? You have a sweep of liquidity right here. Right here. Off of this week, right here, and you have a break of structure below here and a structural liquidity above here. The same thing happened right here, and then you did these two things, and then the market started selling. Now, continuously, look at this. This is a what? Structure again. Why? You have a break of structure right here. This is going to happen on the higher time frame. Let me check the H4. This trade makes a lot of sense, bro. What the heck? What was I doing when gold did all this? Yeah, can you see that? Market give you all these entries, still dropping down, still dropping down. Now look at H4 rejected H4 again. Quickly drop into the 15 minutes time frame. Let's see that. H4 rejected H4 inside the zone. What do we have right here? A 15-minute breakout type 1. After the 15-minute breakout type 1, market give you a structural liquidity and then you sell from here, which is an engulfing sell candle. If you place your stop loss very tight, they tighten your head and take you out. If you place your stop loss very tight, market will take you out. The same thing continuation. After this rejection, market gives us a break of structure below here. Very huge imbalance. So this is the liquidity. Then inside this imbalance, you look for a key level that has history like this, and then you sell from here. How many trades so far? Very simple. Structure type 1, structure type 1, structure type 1. Big, but this one is based on candlestick structure. And then this one is structure type 3. Why? You have it just by having a type 2 H4 breakout. And then you are following the market structure based on what? Model 1. H4 reject H4, 15-minute breakout. And then you can consistently be selling. And then you have a target, which is what? The next external liquidity. Let's say this is your target. Why is this your target? Because this is the last low that the market created before starting this setup. Once the market take this out and hit that particular H4 key level, remember there's a H4 key level here, you are done. Because the market has traded to opposing H4 and then you are done. How many setups? You're cool with model 1, right? So I think you guys have understood model 1. Take your time to go through this video again and again and again. So we'll go to GBP/NZ. Now, I'll tell you guys why I gave you guys GBP/NZD. I gave you guys to give me a setup on GBP/NZD because GBP/NZD have more than 6 different views. Listen, GBP/NZD have 6 different views, and I want you guys to learn something. I want you guys to learn something from this. Do you know what I want you to learn? I gave you guys this intentionally because I want you guys to learn from your personal perspective. When I came to GBP/NZD in the morning, I saw more than 4 things, and any of them can happen, and any of them can fail. And I can see why I'm so happy is all of you gave your own personal preferences. Now that is what trading is all about. Trading is not all about getting it right all the time. Trading is about what I can see, and what I have seen work for me is what I will do. The same thing goes for you. Now, if you go to GBP/NZD, if you go to different perspectives, right? There is a perspective that will tell you this is a continuation setup to take a buy. I saw this. Now, there's a perspective on the H4 time frame that will tell you this is a zone to take a sell. This one, this is a sweep of liquidity, structural liquidity. So some people are bearish and some people are bullish, and none of you is wrong because nobody knows exactly what the market is about to do. That is why. Do you know why I'm always telling you guys this? That question you are asking sometimes doesn't mean anything. But you see, the most correct people is the person that sent me a setup coming from this place. Accurate. It is so accurate. Do you know why? That is what would have happened on Friday. Then the outlook for the following week is going to be different for everybody. You see a sell or you see a buy, and I saw both directions. And me, whenever I have scenarios like this, I'll leave the chart. That's for me. I'll clearly leave the chart, and I don't care. Can you see the way I analyzed it? I did analyze this shit, bro. And this is a 14B, and I'll talk to you guys about it. And that's why what is making this zone high probability. Now, the breakdown for the previous week, there is a buy around here on Friday. But for this week that we are inside now, a lot of people will call a buy. Why? Because there is a rejection and a 4-hour breakout around here on forex.com. And if you check the weekly, there's a rejection and a breakout, and the market is reacting from a QM. So I just gave you guys this assignment because I want to see different perspectives. I want you guys to understand that in the same market, using the same strategy, it's possible and it's okay for you guys to see different things. And all of you are correct. Do you know why? Because nobody knows who is actually correct. There's nothing like being correct and being wrong on this chart. There is only being correct sometimes and being wrong sometimes. Just try to minimize your uncertainty. Just like us, people that are making money like us, our uncertainty is low because when I see something, I know when to avoid. Just like BTC today. I saw BTC and I saw the false breakout and I was just smiling and someone took a loss. I was happy another person in the group told him the truth. And what did that person tell you? He told him that, see, you're not wrong. I just love the way he said, bro, you are not wrong. It's just that me, there is no way I'll take this breakout. And I've told you guys yesterday that usually one of the best way you can get your bias is looking at the most recent daily breakout and follow that direction. Simple. Now, me, immediately I see the market rejecting from a certain zone, like this weekly key level. I'm not trading anymore. I don't care. I will wait until I see the market either give a breakout or refuse to give that breakout. If not, I'm not participating because you see breakout that are fake. You see entries that are fake because the market is trying to even create a particular direction. I will wait calmly. Now we have a daily reject daily, this particular place. Now, oh sorry, weekly reject weekly, right? So you can look for a 4 hour breakout, 2 time frame lower. And then I was waiting to see if the market is going to break this low or not. If the market breaks this low, I am bearish. And then at some certain point, some people saw a daily reject daily and a 1 4 hour breakout, and they were trying to capitalize on the buy. Quite all right, it's okay. Yes, it's okay. But some experience are going to disallow you from taking unnecessary losses because I don't have any reason to buy because the market is rejecting from a zone and I'm waiting to see what will that zone do to the market. And then the market took a loss here. It's cool to take a loss. It's cool. It's very okay. So the essence of that assignment on GBP is I want to see different perspectives. Okay. Whenever you learn anything I'm teaching you right here, it's an information that works. And I've shown you guys how it works and you've seen my result with it. So please, anybody that is learning this thing, okay, back test, understand how it works for you, and then use it properly. Write some rules for yourself. Look for pairs that is work the most. It's going to work everywhere, but it's going to work more somewhere. This is the truth. Now check the one that it will work the most. Stick to it. Work on your psychology. Use proper risk management and execute. Do it gently. Don't rush. Stop eyeing people that are making more than you, and then everything is going to be set for you. So today, primarily, we focus on model one. Tomorrow, we are going to be discussing model two. Ask your questions in the group as always. Remember, daily reject daily, 4 hour breakout, use 4 hour key levels, rejection, 15-minute breakout, look for a proper structure type 1, type 2, or type 3, and then execute. Use a proper stop loss placement and target your zone. That is all. If you stick to this particular thing, your problem is going to be passed, which I promise. I've seen people done it. People that I just posted the video on, I just stick to that particular thing and they've gone far, right? So this is model one. It's just an addition to what the basic doctor system. Now, in case the market did not pull back to a QM or an apex, and it continues moving up and pull back to a H4 key level and give you a 15-minute breakout with a structure, execute. You don't have any business, just execute. Forget about the zones that are below, right? So thank you all and ask your questions in the group. That's going to be all about model one. Tomorrow we'll talk about model two. Thank you all and what? Peace out.